The views and opinions expressed in this broadcast do not necessarily reflect or represent the views and opinions of WBGR Network.
Hello everyone, welcome back to Let's Talk Money 2020. Today is October the 23rd, 2020. Let's get right to it. Look, last week we talked about personal property tax returns, and I gave you, the purpose of the personal property tax returns if you live in the state of Maryland. Other jurisdictions have other types of annual filings, but in Maryland we have an annual filing and we have a personal property tax filing, and it's combined. But we talked about, the purpose of it, and basically the importance of making sure you get it filed. Therefore, your company won't be forfeited, and plus it gives you the rights to do business in the state of Maryland. So, very important document, because I cannot tell you how many times people either let their companies go forfeited because they don't necessarily file the personal property tax returns. They don't send in the tax. They don't understand the whole process. So my aim is really to make it so that you understand everything there is to know about the Maryland personal property taxes. And if you live in a different jurisdiction, you can pretty much do the same thing in that jurisdiction if it requires. So this week I thought I'd instead of just giving you the overview like I did last week, I'm going to get into the nut and bolts of actually completing the personal property tax return, because there are some important things that I left out last time because I simply just did not have the time. So let's get started. Again, this is going to be part 2, the personal property taxes. By the time you get finished listening to part 1 and part 2, then you would know everything you got to know about those personal property taxes. Anyway, as I said last week, I'm going to go through a brief refresher of last week, just very brief, and then I'll get into what we're going to talk about today. So it's really your annual filing. Other jurisdictions call it other things. They call it annual report, biannual report, personal property tax return, arena tax. It depends on your jurisdiction, but in most cases you're going to file some type of annual report. Okay, so let's keep it moving here. So in Maryland, we combine the annual report, which is an annual filing, saying, I'm a Maryland business and I want to keep my business going. But they actually combine it with a personal property tax return as well. So it's really two different reports, but it's combined into one. So if you did not do any business in the state of Maryland, you don't have any properties that you used in terms of being in business, you didn't use those assets in a business, then you're only going to fill out a simple annual report. But if you have personal property in the state of Maryland, and you actually use it in your business, then you're going to fill out both the annual report and you're going to fill out the personal property tax return. The personal property tax return maintains the assets, the personal assets that you have in the business. Again, my quick way to define what is personal property is any assets in the business that is not a part of the real estate. So if there's something that you affix to the real estate, it could be something to fix to the wall. It could be a lease improvement or something. That's not what we're talking about. Those are not personal property items. I'm talking about chairs. I'm talking about desks. I'm talking about computers, equipment, furniture. Anything that if you were to move and you would rapidly just move it easily out of the facility, that is a personal property. Now, cars are vehicles that are included with the exclusion of regular registered vehicles. So a car that you buy to get back and forth to work, that's not considered a personal property. But if you have other types of vehicles, bobcats, bulldozers, that sort of thing, that is subject to personal property taxes. So I'm going to try to move fast today because I'm trying to get to the point where we left off last week. So again, it's really a county tax. The $300 that you pay with the annual report goes to the state of Maryland. and then they send your assessment of the value of your assets down to the county level, and the county actually sends you a bill, and I'll show you that a little bit later with my stuff. So again, the annual fee in Maryland is $300 a year. It depends on what jurisdiction you're in. I've seen some jurisdictions they charge $50 all the way up to like $300 a year. So I was just giving you this little background information so that we can move forward with today's topic. So every year you can get a 3-month extension. It's due on April 15th. You get an automatic 3-month extension. You go to SDOT. Just Google SDOT, and you can do a little drilling down on the site, and you can actually get a 3-month extension. All right, so what I'm going to do is I'm going to get into the nut and bolts of this personal property tax thing. So first, I want to start off by just going to my web browser here, and I am going to Google SDAT. So just Google SDAT, SDAT. We do this all the time, so it's kind of like second nature to me. So once you go to the website, it's going to open up to a page that says Department of Assessment and Taxation. All right, so you click on the business link. There's a business link at the middle of the page. You click on business entity search. This is how you look up your particular business. So you're gonna see a box that really appears, and it says put your business name in. You can see I've typed in a whole bunch of businesses before, and they'll stay right there. So once you put in your name, you search the name of your business. You hit search. Now your name could be long, so you might only try a few characters, and it will find your business based on just a few characters. You don't have to put the whole business name in there. So if you look here, mine has 2 entries because one was a trade name. TD Emory CPA & Associates was a trade name at one time, and that's why the T is in front of that number. And what the Maryland looks for is a W or some type of letter other than T in front of this number here, this department ID number, because this is what you're identified. This is how you're identified in the state of Maryland, by a department number. I believe they start with various numbers. Various letters. I'm not sure, but T is definitely for trade names. So since I already know that this is my business here, you click it here, and then it's going to take you to a general outlook of what your business profile, right, in the state of Maryland. It's going to say, your name, address, who's a resident agent. It's going to say whether this is the most important thing, whether your business is in good standing. And it says, I'm a little surprised. No, I'm not. This business is in good standing. Now, I go here to a lot of companies, and it might say business is not in good standing. And in most cases, it's not in good standing because the personal property taxes for 1 or 2 years have not been filed. And what the state of Maryland does is, right on this page here, it tells you exactly which personal property taxes you need to file in order to be in good standing. So again, if you miss it for 3 years, you're going to see 3 different dates there that the state of Maryland is looking for, and it's going to be $300 a piece to actually get yourself current, because you're going to have to pay $300 per personal property tax return. I didn't make the rules, but that's how it is. All right, so now let's go to this other tab here, and if you want to go to the second tab, this tells you every filing, not necessarily not the personal property tax returns, but any organizational filing that you've ever done with your business. So I think one time the business got forfeited way back sometime because I think we had used the wrong department number, and we were using a different department number, so we had to get that cleared away with our business. And then there were some articles of reinstatement. That's to get the business back going again after we found out what the problem was. This is a resolution we did with the company, and this is an amendment to actually change the name of the company. So any organizational filing is going to be right there. So the main thing that I want to show here is property tax tab. So this tells us if you filed a tax return, if you have not filed, whether you had a penalty, because sometimes we get so busy filing other people's tax returns that I have to scratch my head and say, hey, wait a minute, did we do ours? And a couple of years I think we missed the deadline and we had to actually file it late, so we had to pay the penalty. It tells you what the penalty is and so forth. So this tells you what needs to be filed if so, right? But this is the most important thing I want to show you here. If you go down a little bit, it'll show you the value of your assets over the years. Now, your assets they give you a depreciation allowance every year, so your assets kind of go down in value every year. Your personal property assets, let me just say that. All right, so what I want to do is I want to show you just one thing here, and like I said before, you will be an expert at this pretty soon. So this is the actual personal property tax return. There's several ways that you can actually get this thing filed. You can actually do the PDF version, which is the version I'm looking at right now, and you can just mail it into the state of Maryland, take it to the state of Maryland up in Baltimore. And here's the third option. You can actually go online and you can actually file it online. So at the very top here, let's see here. Let's see if I can find it. Sometimes I can find it, sometimes I can't. Okay. So at the top, they're going to ask you to log in. Yeah, it was there the whole time. So once you log in, you create a username and password. You can log in and you can actually file this annual report or personal property tax online. So you just log in, and if you go over to the left over here, it'll say start new filing. You can click that button over there. You can start a new file and you can do it all online. All right, so that's not what we want to talk. That's not what we want to talk about today. But I thought I'd just tell you that. So let me go back here to the PDFs. So I went over this last week, so I'm not going to go over it in detail. This is just the way the annual report looks. This is the annual report, and if you keep scrolling down a little bit, you'll see the personal property tax return right there. So this is very important because I cannot tell you how many times people come to my office and they don't know about the personal property tax returns, and that company is forfeited. They might have been trying to open up a bank account. They might have been trying to get government contracts. And the number of reasons why you want to make sure you stay in good standing with the state. So what happens is once you fill out this personal property tax return, like I said last week, Maryland actually puts the numbers in. They send the values down to the state. Down to the county in which your business actually resides in. If you got multiple offices, they send it to each offices. So if you have multiple counties, they send it to each county, right? And the county actually sends you an assessment. All right. So this is an assessment that I got. I guess it was in August of 2020. We had some furniture and fixtures. I think we had some old assets on there, but they kind of fall off after a period of time. So we had some furniture and fixtures. And the thing is that the reason why I want to show you this is because in most cases, clients call us and they're panicking because they see this huge number sitting out here and it says county assessment, and they think they have to pay $10,490. No, that's not the case. What this is the assessed value of the asset. So it's kind of confusing here. And I get these calls all the time, especially with companies that have a lot of assets. It could be a nice sized restaurant or something. You might have $100,000 of personal property assets. So they get this document that appears to be a bill for $100,000, $50,000, $70,000, and they say, Troy, what did you do? Why do I have to owe $70,000? This is not fair. But no, this is the value of the assets after they give you a depreciation allowance. So what they do is they take this particular value and they assess the taxes based on a particular rate. So I'm going to show you that in a second. So if I scroll down a little bit, here is my actual tax bill. So they take that $490, that $10,490, and they apply these rates to it. You see? And then they send you a bill. So this is the county. They send you a bill. This bill was probably about $300 or $400, and it's not the $10,490. So you pay that. Then if you live in an incorporated town like Greenbelt, Hyattsville, they have their own police force, and some of them have their own fire stations and so forth. You have to pay a tax if you're a business in the state of Maryland, at the town level too, if you are if your business is in an incorporated town. I went over that last week, so if you want more detail about that, look at last week's video. So I just wanted to show you that this is the actual bill, and this, what you see at the top here, is not the bill, because a lot of times this comes separate, and the clients are always calling me kind of freaked out saying, hey, look, this is a large amount of money. Why am I have to pay the state of Maryland? It's not fair. Why do I have to pay it? But that's not the case. This is not how much you owe. And that's the point that I wanted to make today. So I just wanted to show you what these things look like. Now, I think that between this video, the last week's video, you should have enough to actually fill out your own personal property tax returns. If you have lots of assets, you might want to get a tax professional to actually fill it out for you if they know how to fill it out. There is a lot to filling out these things, especially if you got lots of assets. If you don't have much in terms of assets, it's not a big deal. You can basically do this yourself. You don't need a tax preparer to do it, unless you just don't want the hassle of just reading it and figuring out what goes where. I understand that too. But I just wanted to make sure that we all understood these annual reports. Next week we'll move on to something else. So until next week, be safe. I know we got a lot going these next couple of weeks. So be safe, and I'll talk to you next week. Hi, I'm Troy Emery. Here at TD Emery & Associates, we offer a wide variety of business tax services for small and large companies, including corporations and partnerships, nonprofits, and real estate taxation. Also, we offer audits, compilations, and reviews.
Let our knowledgeable staff at TD Emery & Associates help you optimize your tax benefits today. Dependable, accurate, trustworthy. TD Emery & Associates. Dependable, accurate, trustworthy. TD Emery & Associates.
What is this? The IRS?
We know that your tax preparation requires more than just the basics.
Hi, I'm Troy Emery, and I've spent my entire professional career helping taxpayers in a variety of tax issues.
Dependable, accurate, trustworthy. TD Emery & Associates.
What is this?